In fact, with the Fed lack of printing, you could even argue this could be the worst bear market we've experienced in crypto since its inception. I mean, just looking at the Bitcoin charts, I mean, basically there's an easy level for everyone to follow. It's this trend line right here, which is around 19,500 to 600. And the reason that, again, is a major level, it's the last peak cycle high, right? So 2017 high, we did that full round trip back to that level. Over here, we kind of came into it. We pierced it briefly, stopping out the stops that had bought right above there, and it then floated up. Then you broke down again. So the question is, to me, there's not a question of if Bitcoin's still going to go lower or not. It is. The question I have is, does it bounce first to the upside before rolling back over and heading lower? But again, I'm in the camp where you have a situation where this is a bear market 4-year cycle in Bitcoin, right? There's no denying that. We've been in a 4-year cycle now since 2009. And this is the first cycle for Bitcoin where you don't have Fed printing money at this point, at least. And right. So to me, it doesn't make sense that the cycle would be over already with only a 70% drop versus an 80 to 85%, which is what we usually get in a bear market in Bitcoin. In fact, with the Fed lack of printing, you could even argue this could be the worst bear market we've experienced in crypto since its inception. I mean, I actually agree. I think right now you have a lot of people saying, oh, look, it's a bear flag. Here was a bear flag. Look what we did. Here was a big bear flag. Look what we did. And it's almost too easy. And listen, maybe it does happen, but a lot of people expecting us to break down here. I think that you might see a little bit of a pullback in the dollar. In fact, this morning we did see a pullback until that kind of nervousness over the Nord Stream European pipeline to Russia and so forth. But before that, the dollar was actually falling, which is great for risk assets. That's what we need to see Bitcoin really get a pop.
Great for our ally nations too, though. It's great for our ally nations.
Yeah,
because it doesn't put as much pressure on them as we talked about. Sorry for the interruption.
No, you're fine. You're fine. But yeah, so I'm kind of in the camp where I still think there's a chance, as long as we're holding this 19.5-ish area, we could get that little bit of a move up. And then I think, again, later, within a month, 2 months, we start to curl over and really see that bigger drop. And I still have a target. I mean, you might see a bounce around 17.5, but I still think we're going at minimum down to 12 to 13,000 down here. Just tons of support down here, but it makes sense that we probably are headed there. Oh my goodness, I tell you. I mean, I think first of all, we've seen this big rollover today in the afternoon. So this morning, the markets, equity markets, Bitcoin, we saw some big rallies taking place on the back of the jobs report. So the jobs report, for everyone out there, basically came in just perfect for what the market wanted. So the number wasn't too hot, meaning it wasn't too strong, it wasn't too cold, it wasn't too weak. It was kind of right in that middle section where you saw people coming back to the workforce, unemployment creeping up just a little bit, but the jobs still were created about 300,000, a little bit over that. So I think the market liked that initially. And then, lo and behold, and this is always the shady part of Wall Street, come noon in the early afternoon, we get a rumor about something with Nord Stream 1, the pipeline from Russia and like this. And then all of a sudden the market's just dumped out. And Bitcoin, of course, as a risk asset, followed suit. You can see the same sell-off right there and the little bit of a bounce right here. So I think the bottom line is that, we'll have to see how things go. I was a little disappointed in this kind of reversal today. It looked like maybe Bitcoin was going to climb off of this major support here, which is the 2017 highs. Earlier today, it was kind of testing that 20,500 level again. And then today, again, by the afternoon, we find ourselves just below 20,000. So if you look at it from Jerome Powell's viewpoint, he has to continue to keep pressure on the stock market to not let asset prices kind of advance. Remember, when asset prices go up, people feel richer. They're more willing to spend more money, which is exactly what he doesn't want right now, because that's going to make inflation go up versus down. So he wants people to kind of lose money in assets, because then they're like, oh my goodness, I can't go out and buy a new car. I can't go buy a new fridge. And if he were to say, hey guys, we're coming to the end of this tightening cycle, soon we're not going to tighten anymore, I mean, this market would just rally like crazy and it would work against him. So he's got to talk a tough game, even if secretly I think he thinks like, okay, I have to be careful here because I can't print our way out of the next recession like I have in the past. So he has to be careful what he says and kind of talk a tough game, even if he doesn't believe it deep down. Interest rates at this point, there's no way they can go back because you have so much debt that needs to be rolled over. Not just, by the way, not just from the government. You're talking about corporate debt too, which is I mean, you're talking
corporate and sovereign debt, when you combine the two. So that was because sovereign debt, for people that don't understand, would just be like the money that me and you owe in debt.
Right. I mean, the main key here is that investors are emotional, right? As human beings, we're emotional. So you hear that and the jerk reaction is like, holy cow, we didn't expect that. And then you create this selling pressure. But in reality, my guess is within 2 months from now, we're all going to start, even retail investors will start to realize. And my guess is you're going to get a 50 basis point hike in September, 25, one of the next meetings into year end, and then that's it. I think that's it. I don't think that they can jack it much more than that. Otherwise, like you said, you're either going to crash the market and you're going to cause a default situation that they're aware. I mean, it's like kind of do what I do, not what I say kind of thing. Like it's one of those things where they have to talk that tough game because they're trying to bring down inflation with all the powers that be. And verbal is one of those things, talking, right? So by talking it down, they can bring it down, and then maybe they don't have to crash the economy fully like we fear.
Going from proof of work engine to a proof of stake engine.
Yeah, so I mean,
nothing's going to happen.
I think long term, this is a good move for Ethereum. I don't think in the near term. I think in the near term, you could say that the rally. I mean, Ethereum rallied from under 900 to over 2,000, right? So I mean, that's a huge over 100% move versus what Bitcoin had, this very, very minor percentage comparative move to the upside. So I think that, again, a lot of that upside was the merge. People getting excited, buying in, saying, oh, this is going to be a game changer. My one worry would be that once it happens and that it changes the long term of Ethereum, but the fear and greed and fear right now is kind of ruling things. I would worry that there still is downside on Ethereum until crypto, until Bitcoin bottoms out, all of these things bottom out. It could still be under pressure. Now, maybe it doesn't go percentage wise as low. Maybe it holds this low down here. We'll have to see. But I do think, after the merge, I do think we'll see some sort of rollover.
So you don't think that we'll see another pump potentially for the news aspect with the Ethereum merge?
I think it's still possible. So if we see a weakening dollar, I think you could have one more move up on Ethereum to the 200 moving average right here. But once that kind of hits, my guess is we'll then see the rollover occur and it kind of starts to head back down.
Was there any other cryptocurrencies that you wanted to put any focus on?
Not really. I mean, I think Solana was looking really good earlier today. I mean, it was starting. It's holding this key support line, and again, it'll be interesting to see if it's able to get off of this line. But just like Bitcoin, it's kind of holding that big support line. Avalanche, same kind of situation there. Both of these were looking better. Now they're kind of stalling out a little bit, both in the lower ranges of the chart. But again, I think at this point, it's important to just take it very carefully. Like if you're swing trading cryptos, I think that's fine to do like a Solana, an Avalanche, a Cardano, a Polkadot. But if you're looking longer term, stick with the best of breed with Bitcoin and Ethereum, because you just don't know which ones are going to survive the regulation, right? We know that Gary Gensler has said, except for Bitcoin, most of these are securities. What does that mean? What kind of regulation are they going to have to abide by? And then will other technologies from other coins take better precedent? Will they take over as well? So for me, when I'm looking at my long-term HODL portfolio, I'm trying to stick to the best just to be safer. So, I mean, it's going to be a while. I would say this is the next, basically into year end, I'd expect some pretty wild action. And then I really do hope we start to get some of these things out of the way. I mean, let's get that final flush in crypto. Maybe it coincides with some regulation. We get kind of some clarity on things. And then even as an investor myself, then I'll start allocating more money to crypto. But I'm not going to commit a ton without knowing what Gary Gensler is going to come up with.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.